The United States is broke. Its citizens are broke. And I'm here to tell you that you should be worried. The things that are happening right now are not normal, and they are definitely not what a strong economy looks like. And no, I'm not talking about tariffs. I am talking about a much larger crisis, one that is decades in the making, fueled by government overspending that is now manifesting in the scariest ways, impacting all of us. But what am I talking about? On a big picture scale, a potential US credit rating downgrade, one that could shake the foundation of global financial stability. And on a personal scale, Americans now financing their fast food, splitting the cost of a burrito over 4 paychecks, showing just how over-leveraged the average American is and how normalized overspending has become. But what do these alarm bells actually tell us about what's coming next? How do they impact your wallet? And most importantly, how can you protect yourself? Let's get into it. We'll start big because this is a doozy and it impacts each and every one of us. Moody's says that the US's fiscal strength is on track for a continued multi-year decline as budget deficits widen and the debt becomes less affordable. Moody's being one of the big 3 credit rating agencies. Now, you might be saying, so what, big deal? We already knew all of this, but it is a big deal, and let me explain why. These credit rating agencies hate to say anything bad about the US. They are the last to ring the alarm bell. So when they come out with something like this, you know it is unavoidably bad. But before someone says, wait a second, Taylor, aren't these agencies unbiased? In theory, yes, but you might not realize they're private institutions. Private institutions with shareholders, the largest shareholders being banks and investment firms who hold what? US debt. And who's responsible for rating the US debt? These private agencies. Anyone else see how a conflict of interest could arise here? But don't just take my word for it. We saw it play out in 2008. Who do you think was rating the mortgages, the subprime mortgage crisis? The big 3 agencies, Moody, Fitch, and S&P, self-serving. They're still standing today doing great, while everyday Americans were the ones left holding the bag. Them coming out with this is like a restaurant getting a health code violation, but not just from any inspector, from a friend who has a stake in the business. So if they're giving a violation, you know there's something really rotten in the kitchen. That is what this is like. But here's the kicker. Moody's was the last man standing, still giving the United States a near perfect AAA score, whereas Fitch and S&P had already downgraded to AA+, which is still good. I mean, that alone tells you it's biased. Can you imagine if you ran your credit like the United States, your score would tank. But anyway, the jig is up. Moody's, in their exact words, says, even in a very positive and low probability economic and financial scenario, debt affordability remains materially weaker than for other AAA rated and highly rated sovereigns. Let that sink in, but make no mistake, this impacts all of us. Let me ask you a question. What is the US dollar backed by? Full faith and credit of the United States. So what happens when that credit is downgraded? It confirms to the rest of the world something they already suspected, that the United States is not financially secure. But that means countries would accelerate their move away from the dollar. Borrowing costs would skyrocket, meaning national debt would grow even faster. And for consumers like you and I, aside from losing our purchasing power, well, we could expect to see rates go up, mortgage rates, auto rates, credit card rates. But if banks were forced to sell US debt at a loss, I mean, the already fragile US system would not be able to handle it. At that point, higher rates would be the least of your worries. Rapid inflation would most certainly take hold, and the cost of living, forget it. We would not be able to afford basic necessities. Let me ask you, how much more do you think the American people can take? If rates rise, if the debt explodes, if confidence collapses, we are talking about a full system reset. Let me know your thoughts in the comments below. I want to hear from you. Because all of this big picture comes at a time when Americans are now literally being encouraged to finance their fast food. In case you missed it, DoorDash will let users buy now, pay later for fast food. A totally normal thing, right? Taking out a loan for a pizza, nothing to see here. I've talked about buy now, pay later before. There's a lot to be concerned about here, which, believe me, we're going to pick apart. The positive is that there is no interest, but essentially it's a way to split a purchase up over payment installations. Now, originally this was intended for big ticket items like furniture or appliances, but then it crept into clothes and makeup, anything you can think of, and now it's being used for Taco Bell. Now, this tells us two things. First, it further encourages a culture of spending money you don't have. Now, before I go on, let me be crystal clear. I am not shaming anyone. If you are struggling, times are tough, and this has been a lifesaver for you, and you've got to do what you've got to do to eat, more power to you. But the system, the culture is what I have a problem with. The culture of overspending, that it is not only normal, that it's expected, that it's encouraged even. When did we lose the values of my grandparents' generation that you live within your means? Oh, you can't afford a Taylor Swift concert? Well, just BNPL it. Buy now, pay later. Everyone's doing it. It's not that big of a deal. No real reporting, no real accountability. In fact, we don't even know the exact scope and size of this, but we do know it is exploding in popularity. In fact, this past Christmas, I did a video about buy now, pay later and how it was up tremendously during the holiday season. $18 billion, in fact, just in the month of December, were buy now, pay later in the United States. And that came on top of half of all Americans who took out debt to finance their presents the previous year, still paying off that debt. So now we have more debt on top of debt on top of debt. The second thing that this tells us is just how bad things are. We, of course, have record credit card debt, default surging, and now you can finance your food. In case you didn't know what DoorDash is, it's like an Uber Eats or a Postmates. Essentially, it's a food delivery service. If you are paying to have food delivered to your door, fast food, and you need to split your $20 purchase over 4 installations of $5, maybe you shouldn't have your food delivered in the first place just because your neighbor's doing it. Again, this is not to shame. I know there are exceptions or reasons why people use these services, but for a lot of Americans, it's just keeping up with the Joneses in 2025. $5 every other week to pay off your lunch, that's a problem. Again, this is not about shaming anyone. This is about acknowledging the fact that Americans cannot afford to eat. Yet there are still people out there claiming that our economy is strong. It does not make sense. I'm sorry I'm getting worked up over this, but this breaks my heart. We have debt surging, we have the dollar under collapse, and now we have a situation where people can't even afford to eat their fast food. Yet the media wants to play cheerleader and the government's going to gaslight us and everyone's going to tell us that the economy is strong. It doesn't make any sense. And this is why you have to be looking out for yourself. This is why I come on here and talk to all of you about what's going on, because not enough people are saying it straight. We're watching the slow motion collapse of a system that was never built to last and was never built for you or I. So all I can do is encourage everyone out there to, again, number one, stay educated, and number two, take steps to protect yourself. And if you've learned anything from this video, please make sure to like and subscribe. It helps us so much, and we at ITM are all about building community. So for all of you who subscribe, it not only helps us grow our channel and get the message out there, but it makes sure that you're not going to miss any of this content, because believe me, every day there's new stuff coming out, and I will continue to do my best to bring it to you and to help keep us all informed of what's really going on. And as always, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.